12th Accountancy, Chapter 1, Final Accounts with Adjustments. First question, pass necessary adjusting entries for the following adjustments. A. Closing stock Rs 6 lakhs. B. Provide 6% interest on capital of Rs 16 lakhs. Then C. Rent received in advance Rs 5,000. D. Interest accrued on investments Rs 2,000. Then E. Insurance premium prepaid Rs 1,000. Then F. Wages outstanding Rs 15,000. So we have to pass adjustment entries for all these adjustments. The first adjustment is closing stock Rs 6 lakh. What is the journal entry for this? Closing stock account debit 6 lakhs to trading account 6 lakhs. So in business point of view, closing stock is the income as well as assets. So we have to show trading account credit side and balance sheet asset side. All the adjustment item you have to record two places, because both the debit and the credit aspect have to be recorded. That's why all the adjustment two places, don't forget. Now only we are going to record both debit aspect as well as credit aspect. That's why all the adjustments should come two places. So for closing stock, this is the entry: closing stock account debtor 6 lakhs to trading account 6 lakhs, being closing stock recorded. Then what is next? At the same time, trading account credit side by closing stock 6 lakhs, because this is income in business point of view. And balance sheet asset side, closing stock 6 lakh. So you have to pass journal. At the same time, you should show the effect in trading account and the balance sheet. Two effect: one is debit, another one is credit. That means one is benefit receiving aspect, then another one is benefit giving aspect. The next, B. What is the adjustment? Provide 6% interest on capital of Rs 16 lakhs. So 16 lakh is the opening capital. We have to provide 6% interest for that. So what is the journal entry for this? Adjustment journal: interest on capital account debit 96,000 to capital account 96,000. That means 16 lakh into 6 by 100 is equal to 96,000. Interest on capital in business point of view, this is expense. In proprietor point of view, this is income. According to business entity concept, interest on capital is a expense. This amount should be payable to the proprietor for his capital. So in proprietor point of view, it is income. That's why capital is credited. Capital is increasing. Interest on capital is expense. That's why interest on capital account debit 96,000. Being interest on capital transferred to capital account. So if we provide interest on capital, capital will be increased. What is the transfer entry for this? Profit and loss account debtor 96,000 to interest on capital account 96,000. This is the transfer entry. First one is adjustment entry. We have to show trading account debit side. At the same time, balance sheet liability side, we have to include interest on capital with the capital. Then transfer entry is profit and loss account debit 96,000 to interest on capital 96,000, being interest on capital charged to profit and loss account. Then profit and loss account debit side to interest on capital 96,000 outer column. You have to show what is the effect of final accounts. What is the effect in final accounts? Then balance sheet, capital 16 lakhs plus interest on capital 96,000. So outer column 16 lakhs 96,000. Interest on capital two places. One is profit and loss account debit side as an expense. Then another one is balance sheet liability side. It should be included with capital. In proprietor point of view, capital plus interest on capital. That means in